I was able to execute go trade with just 2 steps. So stay tuned, and if you are just joining this channel for the first time, make sure to click the subscribe button and like this video for more. Alright, we get started. So as you all know, gold is currently on a move to the upside. So first and foremost, you know what we trade. If you are just joining us for the first time, we trade SMC. Alright, we trade SMC and we'll make sure we keep it simple, very, very simple and easy. Okay, so now going on to from the bottom, we got this level, this level. So we can also say this was coming from another block here. All right, it was coming from another block. So from this level, this is our main focus now. This should be our main focus. So from here we got this level, this push up. This is our BS. BS means break of structure. Now this is a break of structure to the upside. So you remember the move, right? It's always like this, like this for an uptrend or bullish trend. Always like this. And then for a bearish trend is the other way around. Okay? For a bearish trend, for those that don't know, a bearish trend will be like this. Like this. Right, so bearish is for a down movement and bullish is for up movement. So currently, unless I forget, whenever we are doing our top down analysis, we always start from the daily time frame, which is the uh, 1 day, 1 day. So we start with the daily time frame, then we move to the 4 hour time frame, and then to the 2 hour time frame, then to the 1 hour, 30 minutes, and then our 15 minutes is where we execute the market. So right now we'll be moving on to the 4 hour time frame. So from this 4 hour time frame, we saw that gold actually left some other blocks which hasn't been mitigated. Um, yeah. So this is another block, and price has left this. Then there are so many other blocks that haven't been mitigated. So coming down to this recent one that price used in giving this sweet buy, which I did enter. From here we can see, remember guys, keep it simple. So yeah, we got a break of structure. This is a break of structure. This was our last break of structure, and then this was the other block. This was the other block, which eventually turned into a support level. So this was the other block and eventually turned into a support level. So why do I call it support level? Now you tend to see there's what we call the support and resistance level. Support yeah, support and so in this level, whenever the market gives like for instance, give a touch, coming down here it gives a touch is for the support, and then it comes up here, another touch, touch, and a touch, touch. Now this touch here is our third touch, which will prompt a very massive push to the upside, breaking this resistance level. So after this third touch, market if always bounce back, bounce after the third touch. So whenever you see something like this, just like one, two, and three in this scenario, always know that the market wants to push up. All right, market wants to push up, and that is how market will keep pushing and keep pushing up. So this means that this you all know that this is a triple bottom, which is also a liquidity, of course. So support is also a liquidity and resistance level is also a liquidity. So I see it that the market has to break one of this liquidity. All right. Market has to break one of this liquidity and respect the other. All right. So in this scenario, how we're going to look at it is the first to complete the 3 points. The 3 points has the greater potentials of pushing the market either to the upside or to the downside. Let's take for instance, it was okay. Let me clone this and get another one. Let me get another one here, and let me get another of this. This is resistance and this is support. Always know that even if it's on a bearish move, which is the downtrend, or a bullish move, which is the uptrend, resistance is always at the top and support is always at the bottom. So let's for instance this a bearish move and we got this to let's say this, and then we got this to this, we got this and got this, I got this to this. Alright, then of course you know that the markets will eventually what go up. Sorry, and then the markets will eventually what go down rather. So seeing from this is our first touch from the resistance level, second touch from the resistance level, third touch, and then it is shoot down. All right. So the resistance level got the 3 touches. Resistance level got the 3 touches before it went down. So likewise, this area, the 3 touches were from the support level. So you might be thinking, why didn't it shoot from this level, from this resistance level, since I was talking about a third touch. Now you notice that after this other block, which I call the first touch, okay. So this was the main um main point, main order block, which started the whole thing. So after this other block, which I say is my main touch, we got a push to the upside, All right. And we noticed that the market came down but didn't go down to this other block. All right. So had it been this particular candlestick got to this other block, it will be notified as a touch. That is a second touch after this. To be notified as a second touch, which makes this um other block mitigated already. Okay, which made this other block mitigated. So it came down and went up, which means it's making this level more, yeah, is making this, giving this level liquidity, which makes this our area, more more important, which make this our area more important and to be focused on, because in SMC we look at liquidity and AVG. Of course, you can see that there's an AVG. Yeah, there's an AVG. Yeah, yes. So there's an AVG here. All right. There's an AVG here. So this is liquidity. Yeah. All right. So after this touch, the market came down here, so giving a second touch here. Meanwhile, it's just one touch here. Why is it just a one touch? Because the price came, didn't fulfill the 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 whole space here, didn't fill up this gap, came up again. We consider this as one, these two things as one. Then it came down and fill it up, and then came up, which is two, and came down again, filling this gap to this other block, which is three, and then we got massive push to the upside. So, but then this 4 hours was not where I executed the market, so we have to go down to our execution time frame. All right, this is just simple explanation. You can also take it from the 4 hours, whichever, but I prefer going down to the lower time frame. I try to make this video very simple for you guys to understand. So we move on to 2 hours time frame. So our 2 hours time frame, we have an adjustment of this other block. Yeah, adjustment. I try to make my chart very neat. So move on to the 1 hour rather. From the 1 hour time frame, the other block is still the same level. Here is at the same level. So we move on to the 30 minutes time frame. 30 minutes time frame is at the same level. Remember our other block, we are looking at the last candle before the massive push to the upside. So if you don't know how to detect your order block, it's always the last candle. All right, last candle down before the massive push up. So um, let me give you another C. Yeah, let me check for another one. Okay. Now, for instance, is um this is BOS. This is a BOS to the upside. Of course, you know. So um the last candle that prompts the movement to the upside is this, right? Is this particular guy here? This particular guy on my other block, this particular guy here is the guy that caused this movement to the upside. So this guy has been mitigated, as you can see. This guy has been mitigated. So this was like the other block that caused the movement to the upside. This guy here is the last candle. You can see there is a push down and then push to the upside. You can see an inner break of structure here. Inner break of structure. So this is the overall break of overall other block caused this push to the upside, which has been mitigated. Okay, it has been mitigated. So that's it for an other block. So we move on to the 15 minutes time frame where the execution kicks off. So from our 15 minutes time frame, yes, we got an adjustment of our other block to this side. Yes, that was so then we how we executed the market was that we got this VG. All right, I hope you can see my screen. I hope you can see my screen. So we got this to enter this, not just to enter due to the support level. I would have entered from here, from this tip, like the this beginning of this rectangle support level. I would have entered, but I stick to the rules, guys. I stick to rules. So what is the rules? Whenever I see my VG is always respected. So I noticed there was a move here, which is of course obvious. Now there was another block, and this other block is not just standing alone, it has an AVG, right? It has an AVG, okay, which has not been mitigated, which makes it more confident for me to trade from here. So from this other block, I stretch it. Remember, we're still working with the three um three touches of the support level, but then we still have to, spot our entry. We don't just enter anyhow. We don't just. So you can see how it's just tipped in to my other block, and I got that massive push to the upside. Got this massive push like this. I try to put my stop loss below this level. Always put your stop loss below the level. I try to put my stop loss below this level, which is eventually below this level. Yes, below this level. So I got my full TP. Initially, this was my first TP. This was my first TP. Always put my first TP, or rather my full TP, at this level. Always use this level whenever I see an FVG on an other block, or an FVG before an other block. I always put my take profit at that FVG, the end of the FVG before the other block. And then I put my profit target, and I got this. Eventually, it's got to this area. Eventually, got to that area. So, guys, I hope you enjoyed the video. I hope you learned a lot from it. And if you have any questions, you can drop it on the comment section. So we've come to an end of this video. Make sure to subscribe and the like button. Alright, guys. Bye for now. Peace out.